Good morning, student. During the previous class, we have already discussed about the meaning of accounting, and then the history and the development of accounting, economic event, that is identifications, measurement, recording, and communication concept. We have already learned in the previous accountancy class in the chapter introduction to accounting. So let us learn more concept about accounting. But before starting this today's lecture, I want to ask you some of the question based on the previous class. So my first question is, what is the meaning of accounting according to the American Institute of Certified Public Accountant, AICPA? The answer is, in the 1941, the American Institute of Certified Public Accountant, AICPA, had defined the accounting as the art of recording, classifying, and summarizing in the significant manner and in terms of money, transactions, and the financial character. My second question is, in which year did the first double entry bookkeeping is introduced? The answer is, in the year 1494, the first book on the double entry bookkeeping were introduced. Which country has first recorded the transaction of payments of wages and the taxes on the clay tablets? The answer is the Babylonia and Egypt around 4000 BC. Which country government has introduced the accounting as early as 2000 BC? The answer is China. What do you mean by economic event? Economic event consists of transactions and which are measurable in terms of monetary term. Monetary terms means in terms of cash. Can anyone explain me the concept of identification? Identification is nothing but the transactions of the business has to be identified, and it should be recorded according to the identified if they are in the monetary forms, and then it has to be recorded in the books of account. So today we are beginning with the new concept. Today we are going to learn about the organizations, that is a business, and the users of a business information and the objectives in the chapter introduction to accounting. So first concept is organizations. What do you mean by the organization? Can anyone tell me what do you mean by organization? Organization refer to the business enterprise, whether for a profit or not profit. Organization refer to a business enterprise, whether for the profit or not for the profit motive, depending upon the size of activities and the level of a business operation. It can be a sole proprietary concern, partnership firm, cooperative society, company, local authority, municipal corporation, or any other association of a person. Organizations in the simple term means it may be for the not for the profit oriented or profit oriented. Means a normal NGO is also considered as an organization if it is in the business. Secondly, the business may be a sole proprietary. So sole proprietary means the individual ownerships, the partnership, when two or more persons or the group is engaged in the business, is called as a partnership firm. Cooperative societies, and the societies which is cooperatively formed under the 1868 Act. Then the company registered under 1956. Then local authorities, municipal corporation, or any other association of a person may form an organization. The organizations and the main purpose is for the business is to make a profit, but in rare cases it may be a non-profitable motive for the organization.
Hi, we're going to talk about the different types of business organizations. One of the types of business organizations is sole trader. It is an organization owned and controlled by one person only, so it's easy to set up. In a sole trader business, the owner has unlimited liability. It means that a sole trader could lose all his or her possessions to pay off any business debts in times like bankruptcy. A sole trader might also lack capital. If their business is successful and they're willing to expand it, it requires more money to do so, and sole traders have often used up all their saving starting up in a business and are often unable to raise debt finance. A sole trader may employ other people in the business. However, it will still have only one owner. A sole trader can also interact with their customers, meaning they can have personal contact with them. In conclusion, a sole trader business is easy to set up and the owner gets to control everything, but they may lack capital and the owner has full responsibility over their business. Another type of business organization is partnership. A partnership is a business owned more than one person, usually 2 to a maximum of 20 people. Like a sole trader business, it's easy to set up. However, they will need to have agreements on finance and how they will run the business. Profits will be shared as well. There will be less burden in a partnership business since partners are able to share ideas and help one another. However, partnerships lack capital compared to joint stock companies. Most partners are general partners who share unlimited liability. However, it is also possible to have some limited partners with limited liability. A sleeping partner will provide money to the partnership in return for a share of the profits, but they are not involved in the management of the organization. Partners can bring new skills and new ideas to the business as well. However, partners might disagree. In conclusion, a partnership business is easy to set up. Partners bring more ideas and skills, but partners might disagree and profits are shared. Private limited company is another type of business organization. It has one or more shareholders. An example of a private limited company is 12 Cupcakes. In a private limited company, there will be more finance and more ideas. Unlike a sole trader and a partnership, private limited companies has limited liability. Private limited company is harder since it is required to disclose financial information. Private limited companies can only sell shares to people known to the existing shareholders. In conclusion, there is more capital and ideas in private limited companies, and it has limited liability. But financial information is required and they cannot sell shares publicly. The next business organization is public limited company. It has at least 2 shareholders and unlike private limited companies, public limited companies can sell shares to any individual or organizations on the stock market through a stock exchange. Just like private limited companies, public limited companies has also limited liability. However, public limited companies are expensive to form. It is also required by law for a public limited company to publish detailed annual reports and accounts.
Just now we have seen the video related to organizations. There are many types of organizations such as sole proprietorship, partnership, then corporations. But in details about this organization we will study later on. But the main things about today's topic is you have to be to know about the different types of organizations. uh, when the businessman set up the enterprise, and there are many users of informations which are eager to know about the business, how it is working, because they want to invest in your organization. Even a government is paying a silent watch on your business organization, because you have to pay the taxes to the government. Interested user of information. Accounting is a means by which the necessary financial information about a business enterprise is communicated, and is also called the language of a business. Many users need the financial information in order to make an important decision. This user can be divided into two broad categories: internal user and external user. Internal user include the chief executive, financial officers, vice president, business unit managers, plant manager, store manager, line supervisors, etc. External user include the present and potential investor, shareholders, creditors, bank and other financial institutions, debentures holders and other lender, tax authorities, regulatory agencies. We are moving to a new characteristics, qualitative characteristics of accounting information. Qualitative characteristics are the attributes of accounting information which tends to enhance the understandability and the usefulness. In order to assess whether the accounting information is a decision useful, it must possess the characteristics of reliability, relevance, understanding, and comparability. Now we will discuss in details each point, like such as reliability, relevance, understanding, and comparability of the accounting information. The first characteristic is reliability. Reliability means the user must be able to depend on the information. So the reliability of accounting information is determined by the degree of correspondence between the what the information conveys about the transactions or events that have occurred, measured and displayed. A reliable information should be free from the error and the bias, and faithfully represent what it is meant to represent. To ensure the reliability, the information disclosed must be credible, verifiable by the independent parties, use the same methods of measuring, and neutral and faithful. In simple term, reliability means the you have to, without doing any window dressing, you have to show the. To be relevant, the information must be available in a time, must help in predictions and the feedback, and must influence by a decisions of a user. By first one is helping them form the predictions about the outcome of the past, present, or the future event, and B is a confirming the correcting the past evaluations. These features helps the investor to invest the money in the business. In order to invest, they have to be predict whether the future, present, and past information is correct or not. So the business has to give the correct information to the investor of the business. Second feature is understandability. Understandability means the decision making must interrupt accounting informations in the same sense as it is prepared and conveyed to them. The qualities and that distinguish between the good and the bad communication in a message are the fundamental to the understandability of the message. A message is said to be effective communicative when it is interrupted by the receivers of the message. In the same sense in which the sender has sent, accountant should present the comparable information in the most intelligent manner without sacrificing the relevance and reliability. This means the accountant should convey the message to the users of the accounting, so that the sender the message in the same sense in which the sender has sent. Third characteristic is comparability. It is not sufficient that the financial information is relevant and reliable at the particular time. in a particular circumstances or for a particular reporting entity. But it is equally important that the user of the general purpose financial report are able to compare the various aspects of a entity over the different time period and with other entities. To be the comparable, accounting reports must belong to the common period and use a common unit of measurement and a format of reporting. Comparative Comparability is also an important characteristic because it has to show the correct measurement and the format of reporting. The investor must have to compare the current and the future speculations about a business. We have studied the four characteristics. First one is reliability, second one is relevance, third one is understandability, and the fourth one is comparability. Now we are moving to a new concept, the objectives of accounting. As an information systems, the basic objective of the accounting is to provide a useful information to the interested group of user, both the external and internal. The necessary information, particularly in the case of external user, is provided in the form of financial statement, wise profit and loss account and a balance sheet. Beside this, the management is provided with the additional information from time to time from the accounting records of a business. Thus, the primary objective of accounting includes the following: maintenance of a record of business transaction. Accounting is used for maintaining maintenance of a systematic record of all the financial transaction in the books of account. Even the most brilliant executive or a manager cannot accurately remember the numerous amount of varied transactions, such as a purchase, sales, receipt, payment, etc., that take place in a business every day. Hence, the proper and a complete record of all the business transactions are kept regularly. Moreover, the recorded information enables the verifiable and act as a evidence. The business Every business has to maintain the books of accounts, because the every individual is not as that much sharp about to remember the every transactions about a purchase, sales, receipt, payment, etc. Calculation of a profit and the loss. The owner of a business are keen to have an idea about the net result of the business operation periodically, that is, whether the business has earned the profit or incurred a loss. Thus, another objective of accounting is to ascertain the profit earned or the loss sustained by the business during an accounting period, which can be easily worked out with the help of a record of incomes and expenses relating to the business by preparing a profit or the loss accounting profit by preparing profit and loss account for the period. Profit represent the excess of revenue income over the expenses. If the total revenue of the given period is 6 lakh and the total expenses is 5 lakh 40,000, the profit will be equal to 60,000. If however the total expenses exceed the total revenue, difference reflected the loss. So calculation of a profit and loss is very important. The business owner or the partners has to be the keen has to remain keen about the profit and loss. To calculate the profit, the expenses should be less than the revenue. Today we have learned about the meaning of the organization, characteristics of accounting information, that is reliability, relevance, then the understandability and the comparability. Also we have learned about the objective of accounting. In that we have covered the three topic, that is maintenance of a record of business transaction, calculations of profit and loss, and depiction of financial position. Now I will ask the question about based on the today's topic. My first question is, what do you mean by the organization? The answer is, organization refers to the business enterprise, whether for the profit or not profit motive. Mention the four characteristics of accounting informations. you have to just mention the characteristics of the accounting. Answer is: first one is reliability, second one is relevance, third one is understandability, and the fourth one is comparability. And my last question is: what is the objective of the accounting? The main objective of accounting is to provide the information to the users of the to provide the information to the users. For your homework, you have to list down the business which are operated in your surrounding area, the local area, without taking any help of the internet. Okay, you have to just mention the business which are operated. Even thank you for listening to me, and have a nice day ahead.